This means a lot. It's like, this is the biggest opportunity. Don't come to me and tell me they made money and you didn't. Literally, there are thousands of high quality people into this space trying to help. None of us have all the answers. Don't expect us to be gurus, but we are trying to help. We want everybody to come with us. It's also self-interested because the more people that come with us, the more people succeed, the more the space is valuable. So we're all incentivized. So we want people not to fail. And I don't want people to come to us and say, well, you guys got it all right. Like, I've given you every tool. I've given you literally thousands of hours of video. I've shown you where I've got it wrong. I've shown you where I've got it right. Just be part of that trend. 2.5 trillion, 100 trillion. Don't get thrown off.
In this recent interview on When Shift Happens, Raoul Pal, co-founder and CEO of Real Vision, shares his bullish perspective on the crypto market's potential. Pal envisions the crypto asset class growing from $2.5 trillion to an astounding $100 trillion, describing it as the largest, fastest accumulation of wealth in all human history. He emphasizes the importance of capturing this megatrend, advising investors to focus on major tokens and avoid excessive risk. At the time of this discussion, Bitcoin is around $63,000, with a 1% decrease in the last 24 hours and a 2% decrease in the last 7 days. With crypto currently valued around $2.5 trillion, Pal sees enormous growth potential, comparing it to traditional markets like equities and derivatives. Before we dive deeper into Pal's insights, don't forget to like, subscribe, and share this channel. Now, let's explore more of Raoul Pal's crypto vision.
Just simple rules of thumb that don't lose your crypto, don't lose your crypto, don't lose your crypto, don't lose your crypto. You know, if the mega trend is going from 2.5 trillion to 100 trillion, honestly, you betting on, you know, some random meme coin is not the best way to capture that trend. You might be able to get a bit of that right. Capture the trend first. Then you can trade around it a bit. But if you do not capture that trend, you will have done the opposite of the message. If I keep telling people, and again, and I explained how this was going to play out, which was that young people were totally and that they were never going to get up the ladder and they needed a gift. And back then, this was 2016, I said, crypto is that gift. This is the only way I can see to get out. And that has continued to play out to this day. And now those same people who were 30 then are now 35 and they're having kids. So they're moving out of cities, buying houses in the country because it's cheaper. They're not going to work in the office because it's cheaper. They have to bring up their kids and they can't afford a nanny. And they still can't get ahead. They've got school fees and retirement and their house. Are they renting a house? Do they own a house? Chances are they don't own one yet. And they know they're everybody knows they're and they don't know how to get out of it. And that whole idea, once you understand that people know they're it explains a lot of how the world works. It explains why we get the left and right polarity. I've got to blame somebody for why I'm Then it's also the rise of the speculative economy. Why? Because I'm never going to get ahead. I have to take risk. That explains GameStop. It all came from Occupy Wall Street. It all came from the same thing. It's all the same movement of these people realizing that their future has been robbed because the baby boomers took too much debts on, because there was too many of them and the economy couldn't cope with that. So it's a long economic story that got there, but the present day is we need to take action. Well, it's not from wages. So people are doing 2 jobs. We all are. Bizarrely, right? We're all doing a multitude of jobs. That's in itself weird, but we've kind of adjusted to it, saying it's normal. Then they're having to learn how to speculate. They all became financialized. 2020 was like, that whole generation didn't care about Real Vision. There were some people who studied the masters of finance and stuff. Yeah, sure, they cared. They didn't care about markets. They didn't care about anything. They just didn't give a shit. They cared about Instagram. 2020 came, and suddenly they were given money, and they were at home, and they were given a game to play, and they saw the future. And that was the largest, fastest financialization of people, I think, in all history. It was astonishing. That's why I got into this in the first place, was realizing that you didn't own your assets in a financial system. I'm not going to make the same mistake and give somebody my assets, or give somebody control of my assets, or give somebody a share of my assets. The beauty of crypto is self-custody. It's so magical, and people don't yet understand that. They will.
As we heard Raoul Pal provide insights on the current financial landscape and the challenges facing younger generations. Pal emphasizes the importance of identifying and investing in long-term, transformative trends. He points out that digitization is a key secular trend, stating every day is more digital than the previous day. This trend encompasses various sectors, including finance, culture, and technology. Pal encourages investors to focus on areas with consistent growth, such as the crypto and digital asset space. He draws parallels between the current state of crypto and the early days of the internet, suggesting we're on the cusp of revolutionary innovations. Pal advises thinking long-term and not getting distracted by short-term market fluctuations. Let's dive back in and hear more insights from Raoul Pal on how these secular trends shaping the future of finance and technology.
We talked about memes. Memes are valuable. What is the value of the culture of Disney? Disney's what, $100, $200 billion company? The value of Disney culturally, trillion, 2 trillion? It's gigantic. The value of pop stars, the value of all sorts of things, sports teams. We haven't known how to realize this. These are intangibles. So those kind of things. Then there's just the simple use cases for things like ticketing. Straightforward, all tickets should be NFTs, particularly hotel rooms, plane tickets, all of that kind of stuff. People, it's really interesting. I watch a lot of people, particularly the finance people who get crypto. They're like, yeah, real world assets, that's the big thing. I'm like, yeah, it's huge. I get it. Add together all of the financial services companies in the Western world, all of them. And add together all of the culture companies. And for that, that's Google, because of YouTube and WhatsApp. That's Meta, X. You could add LVMH. You can add, the Disneys, the media companies, the sports teams, the music, everything else dwarfs the finance industry, kills it. Just the number of ads that are served on social media, which is just attention monetization, hundreds of billions of dollars a day. But if Taylor Swift tokenized
Absolutely.
her economy, how big is that?
Crazy.
Her economy is so big, it moved the US economy when she was touring. It added to GDP measurably. This is a really important point, is everything is easier when you're riding a secular trend. Why was my career successful? I rode 2 trends. One was the rise of the derivative market, gigantic. It's a $1.4 quadrillion market now. That was one. The other was the rise of hedge funds. So at the biggest customer base and the biggest product, you can't help but make money. That's a secular trend. You want to be in places with a secular, you want to live in a country where the economy is growing on a secular basis. It's like one of the reasons why Spain is difficult to live in. Most of Europe is like a museum now. It's beautiful, but it's not a place to be an entrepreneur because the economy is not growing. Same with Japan. And China's gone kind of ex-growth. India's the fastest growing economy, the Middle East. But there's 2 trends that are easily investable that are in a secular trend. Every day, and it's all the same trend, every day is more digital than the previous day. It's as simple as that. And therefore, this whole trend of digitalization of everything, including human intellect, including human labor, that's robots and AI, including money, everything, is going to outperform. So just ride that trend and don't overthink it. I see so many people wanting to trade commodities here and this cycle there. And I'm like, you're wasting your time. You don't need to do all of that stuff. I've been guilty of all of that stuff, but I've realized that you don't need to do any of it. All assets are correlated to the business cycle and the everything code cycle. It's all a debt refi cycle. So if everything is correlated, then diversification doesn't work. So if diversification doesn't work, then you want to own the asset with the best risk-adjusted returns. Now, this is where people get weird. They're like, yeah, but crypto goes down 80% every 4 years. On a risk-adjusted basis, it is an alien asset class. The reward so far outweighs the risk that people can't get their heads around an asset that goes down 98% like Solana and still compounds at 250% a year. So when I take a chart of everything, I just compare one asset to another. And I look at the chart of NASDAQ, looks amazing. It's a log, secular, exponential trend. Divided by the price of Bitcoin to see relatively how it's done. It's down 97.9%. As one of the greatest traders around, I mean, he's all crypto. Dan Tapiero, Dan Moorhead. Just one after the other, they get there and they never come back because the returns on a risk-adjusted basis are so ridiculous that they realize this is if there's one trade to dedicate your life to, this is the trade. This is the big one. The biggest trade mankind has ever been given. Now, that sounds hubristic, but it's proven. No other asset has ever done 22.5 million% returns in 12 years.
As we conclude hearing Raoul Pal's views, he remains optimistic about the crypto market's potential to grow from 2.5 trillion to 100 trillion, describing it as the largest, fastest accumulation of wealth in all human history. Pal emphasizes the importance of capturing this megatrend while avoiding excessive risk. We would love to hear your thoughts. Do you agree with Pal's assessment of the crypto market's potential to reach 100 trillion? How do you plan to navigate the crypto space safely while still capitalizing on potential gains? We believe that in the crypto, blockchain, and Web3 space, our collective goal is to increase attention and drive adoption. By sharing valuable insights and educational content, we aim to contribute to the growth and understanding of this innovative industry. Thank you for tuning in to Only the Savvy. If you enjoyed this discussion, please subscribe, like, and share our video for more engaging content diving into the innovative world of decentralized technologies.